Welcome back to the Malaysia Money Matters show. It's the 1st of October 25. Today, we're doing a fast, thorough, deep dive into the corporate policy and geopolitical news that, well, really matters to you.
Absolutely, and it feels like global friction is the theme today, hitting local companies almost directly. Let's maybe start with some Malaysian corporate updates.
Sounds good. Okay, first up, VS Industry. They reported a net loss of RM33 million in their latest quarter, 4Q FY 2025. That's a really big swing from the RM126.6 million profit they had the year before. Revenue also dropped 29%.
Yeah, that's almost a RM 150 million reversal. And it seems the main reason, or at least a big part of it, was the U.S. reciprocal tariffs hitting harder than expected, caused customers to push back deliveries.
Ouch. Is there any good news there?
Well, they did mention that customer orders are actually picking up now, and their Philippines operations are moving into mass production, so maybe things are stabilizing a bit going forward.
Okay, let's hope so. Now, shifting gears, Vestland. There's a mandatory takeover offer in MGO, triggered because some major shareholders formed what's called a concert party. Datuk Lu Fu Heen is involved.
Right, a concert party basically acting together to gain control. But the offer price is interesting.
Yeah, that's the kicker, isn't it? It's 34 cents per share, but the market price is way higher, at 50.5 cents. That's a discount of nearly 33%.
Exactly, a huge discount. They say they want to keep the listing, but it definitely makes you wonder, is the market too high, or are they just trying to get shares on the cheap? Something for you to think about.
Good question. On the flip side, Mitrajaya Holdings seems to be doing really well.
Oh, yeah.
They announced a massive increase in a contract with NEXTDC's Malaysian unit. It doubled from about RM 375 million to over RM 800 million for data center work.
Wow, doubled. That's significant. And I saw their stock closed at a 7-year high because of it. Looks like their construction division has strong potential right through to April 2026.
Definitely a bright spot. But not all smooth sailing in the corporate world. Look at Greenyield.
Yes, the family feud continues there, doesn't it?
It seems to be escalating.
Yep.
Shareholders with over 10% are trying to call another EGM. They want to remove the chairman, Fu Qiang, and 3 independent directors.
And this comes right after the CEO, who is the chairman's son, resigned recently. It points to some pretty serious internal governance issues despite their focus on agrotech.
Okay, stepping back for a broader view, what about market sectors? Tech.
Well, Kenanga actually upgraded the Malaysian tech sector to overweight. They think the global chip upcycle, driven by AI and 5G, is going to last longer, maybe until mid-2026.
Okay, positive on tech. What about oil and gas?
CGS International is also overweight there. They're pointing to resilient oil prices kind of hovering in the high 60s US dollars per barrel. A lot of that is apparently supported by China buying up crude pretty heavily for its strategic reserves. So companies like Hibiscus Petroleum Dialogue Group could benefit.
Right, but that China factor is key. If they fill up those reserves,
then that support might weaken. Exactly. It's a risk to watch.
Okay, let's move to national policy. Big news on subsidies.
Yes, the Buda 95 Targeted Subsidy Program. Transport Minister Anthony Loke made an announcement.
He said nearly 900,000 non-citizens, even if they have a Malaysian driving license, won't get the RN95 subsidy anymore. They'll have to pay the market price, RN 2.60 per liter.
And the goal there is pretty clear. Focus the subsidy only on Malaysian citizens and save the government potentially billions. There's also talk about finalizing rules for e-hailing drivers and maybe boat operators too.
Makes sense. Also on the policy front, Bank Negara Malaysia has a new rule for personal loans.
That's right. Starting in 2027, if you apply for a personal loan over RM 100,000, you'll have to complete a financial education module first.
Trying to encourage more responsible borrowing, I guess.
Exactly. Curbing unhealthy lending, tackling household debt risk before it builds up too much seems prudent.
And on the energy front,
Deputy PM Fadila Yusof just inaugurated the new 1,200-megawatt Pulau Indah power plant. It's a cleaner CCGT combined cycle gas turbine facility.
Fits with the National Energy Transition Roadmap, the NET-TR.
Precisely. And speaking of future energy, Selangor's MB, Amiruddin Shari, announced plans to send local talent to China, to Tsinghua University, specifically to study nuclear energy generation. A very long-term view there.
Interesting. Okay, let's quickly look internationally. Trouble in Washington.
Yeah, it looks like they're heading towards another potential government shutdown. They can't seem to agree on a temporary funding deal.
What does that mean practically?
Well, disruptions. Could mean slower flights, delays in releasing important economic data like the unemployment report, just highlights the ongoing political issues there.
And at the same time, President Trump announced new tariffs.
Yes, 10% on lumber and a hefty 25% on furniture imports, starting October 14th, justified under national security grounds, Section 232.
National security for lumber and furniture. Okay. Who does that hit?
It puts pressure mainly on big exporters like Canada, Mexico, and Vietnam, adds another layer of trade friction.
Meanwhile, in the Middle East, there's a deadline related to Gaza.
Yes, President Trump gave Hamas about 3 to 4 days to accept a U.S.-backed peace plan. It calls for a ceasefire, hostage exchange, but also the disarmament of Hamas.
And how's that being received?
Hamas wasn't involved in drafting it. Officials are apparently calling it completely biased to Israel and say the disarmament part imposes impossible conditions. So a very tough sell, even with regional pressure.
Understood. Finally, India, seeing some market turbulence.
Big time. Global investors have been pulling out of Indian stocks. We're talking U.S. $16.8 billion in net outflows so far this year.
What is on an exit?
Concerns over U.S. tariffs again, but also increased H-1B visa fees seem to be spooking investors. It's pushed the Indian rupee to an all-time low against the dollar, around 88.80, despite their central bank trying to intervene. Domestic buying is still holding the market up somewhat, though.
Wow, okay. So quite a mix today.
Yeah, if you pull it all together, the big theme is definitely this constant back and forth, isn't it? Global politics, like tariffs and peace plans, directly influencing specific local company results, and even national policies like subsidies.
It really drives home how interconnected everything is. Which leads to a final thought for you. We see national security being used to justify tariffs on things like furniture, hitting VS industry indirectly, maybe contributing to outflows from India. How far does that term national security really stretch these days in shaping global trade and supply chains that seem, on the surface, unrelated? Something to ponder. We encourage you to subscribe to the Malaysia Money Matters podcast for more deep dives into the news shaping your financial world. Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.